How about that? 2 nice crypto setups in a row. Stay tuned. Hi, this is Tim from TradingStrategyGuides.com. Friday was Ripple. Today it's the old standby Bitcoin. I believe Bitcoin is headed up again, and I'm going to show you why I think so. Plus, we'll look at the open trades and another dip into the archives for our trading maxim of the day. Remember, you can speed this video up by clicking the gear icon in the lower right of the video and selecting a new speed. Let's take a look at our open trades. I told you Friday that I sold Urban Outfitters on Thursday's close at 22.01, and it hit our target today. So I closed half my position for profit, set the stop to break even on the remainder. So that's $859 more in our $100,000 account. Today we hit 30% profit in our account in 3 months' time with no more than a 2% risk on any trade. That beats the S&P by a bunch. I mentioned in Friday's video that I entered the E-mini S&P 500 when it closed below the range on big volume Thursday. I sold it around 29.5175. I also noticed that we're recording the video in the afternoon that it hit my target. I closed half for profit and set the stop to break even, and then the well-publicized drop happened today. This huge candle. Well, too bad it's not that huge. But it's almost that huge, right? I'm going to watch this thing for signs of stalling, and I'll close it when that happens. In the meantime, I've moved my stop down here to 28.8250, which is roughly the 50% point of today's huge bar. So that locks in 69.25 on the second half. If this move is strong, it's unlikely to retrace that much, and if it's weak, that's a good place to get out. So that's $853 profit on the first half, and twice that locked in on the second half. RNO hit our target on Friday, and I closed half the position right here. Moved the stop down to 50.40 to lock in 46 cents on this. And lastly, RYAAY. I took RYAAY short on Friday on this close below this descending triangle. Hit the target today. I closed half, moved my stop to break even on the remainder. So my stop is currently 61.32, and we'll see where it goes from here. If it pushes down tomorrow, I will move the stop to just above this bar. For those who are keeping track, here's the spreadsheet showing all the trade setups I've done videos on since last April. I started this spreadsheet with a fictitious $100,000 balance right up here, and please forgive me that this is not a beautiful spreadsheet, but it's functional. The green lines are trades that hit our first target or better. The pink ones are trades that were shut down for a small amount, less than the full risk. The darker pink trades are the ones that hit the stop, full risk, only 3 of those. The yellow ones are trades that have hit the first stop and are currently running trailing stops on the second half. And white, of which there are none, are trades that are open that have not hit first target yet. Over on the right, you can see the profit for each trade using a 2% risk on the current account amount when the trade is entered. So this is the risk of this particular trade. This is the profit that we're taking over here. And this is the running total on our $100,000 account. You can see we just hit the 30% mark today. This spreadsheet does the calculations based on how I manage the trades. It assumes a 2% risk on a full-size position and then scales that position based on my size entry. Okay, let's talk about Bitcoin now. You guys know I love trading cryptos, and this is a really nice looking bull flag. This huge trend up right here, and then pulls back in a parallel channel like that. As with all consolidation patterns, we want to see declining volume and declining volatility. Now, volume is obvious. This is how much is actually traded on this particular market. The volatility is simply how much the price is moving around. The more it moves around, the higher the volatility. I use the average true range, or ATR, to measure the volatility right here. This ATR is the average candle length of the last 14 candles, and you can see that it's dropping off right here, which means that the candles are getting shorter and the volatility is dropping. This pattern is called a bull flag, because we anticipate that it will break bullishly to the upside. I will only trade this pattern on a break to the upside. So the setup is real simple. We'll buy a daily close above this bull flag. We want to see at least average volume on the breaking candle. So on the breaking candle, you should see a volume bar that will exceed this average line. Now, if you've got at least 75% of the average volume, you can open a half size position to reduce your risk. You can calculate 75% of the volume by taking this number, which is the volume, and dividing it by this number, which is the average of the volume. You should get at least 0.75 when you do that. If you get a smaller number, don't enter the trade. Stand aside. Set your stop loss to 1.5 times the ATR. So on the breaking candle, you'll take this number, multiply it by 1.5, and that will be the amount of your stop loss below your entry. So this will break here. You'll enter up in here somewhere. Your stop loss will be 1.5 times the ATR on that breaking candle behind it, and your first target will be 1 times that ATR ahead of it. If after entering the trade we get a candle that closes back inside the bull flag, we will take the loss right then and not wait for it to hit the stop loss. Our intention is that a breakout from these patterns should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. Yes, I know sometimes it will pull back, close back inside, and then go up and hit our stop. That's okay. That is no longer a high probability trade, and that's the reason why we want to get out of it as quickly as possible. When the price hits our first target, we will close half the position for profit and set the stop loss to break even on the remainder. So we'll have a free trade from there on. We will then follow the stops as price moves in our direction until the market takes us out. Okay, tough love here. I am not the boss of you. I'm not telling you what to do. It's important that you know your gifts and your limitations as a trader, and you work with those gifts and limitations. That, I believe, is the most important thing you can learn about trading, the whole psychology thing. I'm just telling you how I handle these trades. If you want more details about that, look below this video and you'll find a link to the trade management video. Also, if you need help with this whole psychology part of trading, then I recommend you go to Amazon and buy a book called Trading in the Zone by Mark Douglas. It is the single best book I've read to benefit my trading. I reread it a couple times a year. It's not going to give you any trading strategies or indicators. It's going to help you with trading psychology. That's what it takes to be a good trader. That's what I think the Holy Grail is. All the other stuff is secondary. I'll put an Amazon link below the video for this book. Now, I know I say this stuff all the time, but I do it because it's important. So just do it. Just understand the psychology. And speaking of psychology, let's have a look at today's trading maxim. How's that for a segue? A maxim is a general truth, fundamental principle, a rule of conduct, or just a proverbial saying. These maxims come from various sources, books, the internet, friends, coaches, teachers, or other acquaintances. The purpose of my maxims is to motivate me to discipline. I suggest you try this yourself and start your own list of maxims. Maxims will be things that you say to yourself while you're trading to make sure you always do the right thing. Feel free to borrow from my list. Today we're going to dig into the archives. Tim's trading maxim number 3. Never bet the farm. You should never allow any one trade to make you or break you. You may think you've got the bull by the horns, especially if you get some big winners and you think you can go all in on your trades now because you know what you're doing. The trouble is, no one has the bull by the horns. There's no way to know which way the market is going to go, unless you have a time machine or a crystal ball or something. No trade is ever a sure thing. Some may have a higher probability of success, and that's what we try to capitalize on. But no trade strategy is 100% successful. And if anyone tells you that their strategy is, then they're lying to you. So, never bet the farm. And for those of you that are not natural English speakers, that means never bet your home or your livelihood or anything that's really important to you or that would change your lifestyle on a single trade. You have to protect your trading account. You can't go all in on your trading account because if you blow that out, you're done trading. This is why I recommend a maximum risk of 2% per trade. I had to learn this the hard way. Please learn from my mistakes. Yes, I said mistakes, plural. I had to relearn this one a couple of times. Hopefully, I will never have to learn it again. Remember our trade plan here. We're looking for a daily close above the bull flag to buy Bitcoin. If the volume is not quite average, go half size, as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR. Your first target is 1 times the ATR. And remember to check out the trade management video for more details. The link will be below. If you don't have the time to analyze charts, or maybe you don't even want to, I think you'll like this. Trading Strategy Guides has the Strike Trader Elite and the EFC Trade Signals services. You'll get Forex trade signals on a dozen or so pairs on several different time frames, all based on the Strike Trader Elite and the EFC system. Look below this video for a link to the free signals on the Telegram application. I'll also post a link to my video that explains the Strike Trader Elite system. And be sure to come back to Trading Strategy Guides YouTube channel every week on Monday and Friday for my analysis videos and Wednesday morning for my training webinar. And check out the blog for great trading strategies. I'll put the link below. Also, follow me on Twitter. If things happen between my videos, I'll post them there. I'll put my Twitter link below as well. Tell your friends about us and help us make this the best trading channel on the internet. As always, thanks for watching, thanks for subscribing, and don't forget to hit the thumbs up below. Have a great week, and I'll see you next time.